In a market often fixated on the next quarter's earnings, the real wealth-building opportunities often lie in the long game, in companies with solid foundations, disruptive technologies, and clear growth runways. Today, we're breaking down 6 such companies, handpicked by top analysts for their exceptional long-term performance potential. These aren't just momentary flashes in the pan. They are strategic plays designed to deliver serious gains for patient investors. These are the stocks Wall Street believes are positioned for massive upside. Let's dive in. Starting off our list is Ascendis Pharma AS, ticker ASND, a Denmark-based pharmaceutical company making significant strides in rare diseases. With a staggering 5-year revenue growth rate of 125.53% and a year-to-date performance of 43.25%, ASND has caught the attention of 45 hedge funds and analysts projecting a 26.22% upside. Bank of America Securities, for example, reiterated a buy rating and named it a top pick for 2025, primarily due to the strong global launch of Yorvipath for hypoparathyroidism. This product is showing accelerated adoption as payor coverage expands, and it holds a crucial competitive advantage as the only marketed product in its category, with rivals years behind. Analysts model Yorvipath's peak sales at $3.15 billion, translating to substantial per-share value. Beyond Yorvipath, Ascendis is advancing its TransCon CNP, navepegritide, for achondroplasia, with key FDA and EMA decisions anticipated by the first quarter of 2026. This extensive pipeline and robust 84.88% gross margin reflect impressive execution and a clear path to sustained growth, even as they navigate minor patient safety reports, which analysts believe are unlikely to be drug-related. Next up, we have Sezzle Incorporated, ticker SEZL, a fintech disruptor in the buy now, pay later space, boasting a 5-year revenue growth rate of 63.03% and an eye-popping 101.47% year-to-date performance. Despite some mixed Wall Street opinions, Sezzle's Q2 2025 results blew past estimates, with revenue up 76.35% year-over-year to $98.7 million and EPS topping consensus by $0.11. The company achieved a record gross merchandise volume of $927 million, fueled by strong user engagement and new app features. Sezzle's strategic shift toward a subscription model and new product launches like Pay in 5 and Sezzle Balance are enhancing customer growth and revenue momentum. Management has significantly raised its full-year 2025 guidance, projecting revenue growth of 60 to 65% and a nearly 50% increase in net income, showcasing immense confidence in its trajectory. While growth is impressive, investors should note potential impacts from less profitable on-demand users and broader macroeconomic conditions. Nonetheless, analysts like B. Riley Securities see further upside, driven by Sezzle's expanding merchant partnerships and crucial web bank collaboration, positioning it for continued market share gains. Moving into the biopharmaceutical sector, Ocular Therapeutix Inc., ticker OCUL, is capturing analyst attention with its innovative sustained-release drug treatments for eye diseases. OCUL has a 5-year revenue growth rate of 50.81% and a year-to-date gain of 38.44%, with analysts seeing a 40.50% upside. Chardon Capital initiated coverage with a buy rating, highlighting the massive potential of AXPAXLI, the company's lead program. AXPAXLI aims to revolutionize treatments for wet age-related macular degeneration and non-proliferative diabetic retinopathy by significantly reducing the frequency of anti-VEGF injections. While Q2 2025 saw a dip in total revenue, its FDA-approved product Dextenza showed strong sequential growth, and Ocular maintains a robust cash position of $391.1 million, providing a cash runway into 2028. This long runway supports its pivotal Phase 3 SOL trials for AXPAXLI in wet AMD, with top-line data expected in Q1 2026 and H1 2027. Critically, Ocular is aggressively expanding AXPAXLI into the NPDR market, which is an estimated 10 times larger than wet AMD, having received FDA Special Protocol Assessment for its registrational trial. This strategic expansion, combined with strong analyst support and rising price targets, underscores Ocular Therapeutix's potential as a game-changer in ophthalmology. CleanSpark Inc., ticker CLSK, a vertically integrated Bitcoin mining company, is making a bold strategic pivot that has Wall Street bullish, reflected in its 5-year revenue growth of 127.38% and 44.13% year-to-date performance. With 19 hedge funds holding the stock and analysts projecting a 47.76% upside, CleanSpark is transitioning beyond pure Bitcoin mining to embrace the burgeoning AI data center infrastructure market. This diversification leverages its substantial power assets and aims to mitigate reliance on volatile crypto cycles. The company recently appointed a senior VP of AI data centers, formed a strategic partnership with Submir, and acquired rights to 271 acres in Austin County, Texas, to develop a next-generation AI data center campus with over 200 megawatts of power. Operationally, CleanSpark achieved an impressive 50 exahashes per second hash rate, becoming a leader in American-based Bitcoin mining. While Q2 2025 saw a net loss due to Bitcoin price fluctuations, Q3 fiscal 2025 reported soaring revenues of $198.6 million, up 91% year-over-year, and a net income of $257.4 million, significantly beating expectations. The company also holds over 12,700 bitcoins, valued at over $1 billion. This dual-pronged strategy in both Bitcoin mining and AI data centers positions CleanSpark for immense long-term growth, as recognized by analysts like Needham and Chardon Capital. Avidity Biosciences Inc., ticker RNA, is a biotech firm focused on a new class of RNA therapies called antibody oligonucleotide conjugates. While its 5-year revenue growth rate is 16.53%, its year-to-date performance is a solid 31.69%, with analysts projecting an impressive 58.30% upside. The most impactful recent development, however, is the definitive agreement for its acquisition by pharmaceutical giant Novartis for approximately $12 billion, announced in late October 2025. This all-cash transaction offers Avidity shareholders $72 per share, representing a substantial premium and validating Avidity's innovative AOC platform, which enables targeted delivery of RNA therapeutics to muscle tissue, a major challenge in treating rare neuromuscular diseases. The deal encompasses Avidity's 3 late-stage clinical programs, including Delzota for Duchenne muscular dystrophy, which received FDA breakthrough therapy designation. The data for Delzota showed a reversal of disease progression, a 25% increase in dystrophin, and an over 80% drop in creatine kinase. Novartis views this as unlocking multi-billion-dollar opportunities. A unique aspect is that Avidity will spin off its early-stage precision cardiology programs into a new publicly traded entity, providing existing shareholders additional value. While the acquisition price largely captures immediate upside, this move underscores the immense value analysts see in targeted RNA therapies and the potential for these groundbreaking treatments to transform patient care, leading to significant returns. Topping our list is Corcept Therapeutics Incorporated, ticker CORT, a pharmaceutical company targeting severe diseases by modulating cortisol. With a 5-year revenue growth rate of 15.31% and a fantastic 61.14% year-to-date performance, Corcept has 35 hedge fund holders and analysts projecting a massive 70.77% upside. The company recently announced FDA acceptance of its new drug application for relacorilant to treat platinum-resistant ovarian cancer, with a decision date set for July 11, 2026. This application is based on compelling positive results from the Phase 3 Rosella trial, where relacorilant combined with chemotherapy showed improved progression-free and overall survival without adding safety risks. Corcept also submitted a marketing authorization application to the EMA, signaling a global strategy. Beyond oncology, relacorilant targets hypercortisolism, Cushing's syndrome, with an earlier FDA Prescription Drug User Fee Act date of December 30, 2025. Financially, Corcept reported strong Q2 2025 results, with $194.4 million in revenue, beating EPS estimates, while full-year 2025 revenue guidance was adjusted due to capacity constraints for its existing product Korlym. Corcept maintains a healthy balance sheet with $515 million in cash. Analysts maintain a moderate buy rating, seeing significant upside, but investors should be mindful of its high PE ratio and ongoing patent litigation for Korlym. However, the robust pipeline and successful clinical trials for relacorilant underscore Corcept's long-term growth potential and strategic importance in critical disease areas. Now, let's take a closer look at the raw numbers. When we see the current price, you see a wide range, from Ocular Therapeutics at a compelling $11.97 to Ascendis Pharma and Avidity Biosciences both in the high 60s and the high 20s. In terms of market cap, we have Sezzle and Ocular Therapeutics hovering around $2 billion, suggesting they're still nimble enough for significant growth explosions. Meanwhile, Ascendis and Avidity command larger market caps around $10 to $12 billion, indicating more established positions in their respective high-growth biotech sectors. CleanSpark, a Bitcoin miner pivoting to AI, sits comfortably in the mid-tier at $5.39 billion, showcasing its rapidly expanding infrastructure. Revenue figures reveal a striking contrast. Corcept Therapeutics and CleanSpark are generating hundreds of millions in sales, with Corcept leading at $716 million, demonstrating strong commercial operations. On the flip side, Avidity Biosciences, despite its $10.2 billion market cap, reports a much smaller $10.7 million in revenue, which is typical for a biotech company in late-stage development whose value is heavily tied to its pipeline and recent acquisition news. Now, let's talk gross margin, a critical indicator of a company's core profitability before operating expenses. Corcept leads the pack with an incredibly high 98.3% gross margin. Ascendis also shows robust profitability at 84.9%. However, Ocular Therapeutics and Avidity Biosciences are posting significantly negative gross margins, negative 214.1% and negative 3,725.5% respectively. This isn't necessarily a red flag for biotechs. It often reflects intensive R&D investment and early commercialization costs, where the market is valuing future breakthroughs rather than current product sales. Finally, earnings per share, Sezzle, and CleanSpark are both comfortably profitable, with $3.11 and $1.07 EPS respectively. Corcept also posts a healthy $1.27 per share earnings. In stark contrast, Ascendis, Ocular, and Avidity are currently operating at a loss, with negative earnings per share figures. Again, for these clinical stage biotechs, profitability often lags behind significant R&D spending, and their valuation is driven by their pipeline's potential for blockbuster drugs, as validated by Avidity's recent acquisition. These numbers truly highlight the diverse risk-reward profiles within these analyst-backed long-term picks. So these are 6 companies that analysts are backing for long-term growth and significant returns. Which of these analyst favorites do you think has the strongest long-term potential, and why? Or perhaps you're watching another hidden gem for the long haul? Drop your thoughts, insights, and predictions in the comments section below. And if you're looking for even more strategic investment opportunities, don't miss our video right here on 7 most profitable dividend stocks to buy right now. Click to watch it now.